Hey there traders, welcome back for episode 25 from the StockBandit.tv. I'm sure glad that you made it. So we've seen this market kind of sliding steadily of late, and that's par for the course when you're in a bear market, right? Well, yes, but we've also talked about getting oversold and what are the prospects for some kind of a short-term upside for maybe a bounce. Well, did you happen to see Tuesday's upside? That was this bar right here. It was a pretty good bounce for a one-day move. I think we're up about 250 on Tuesday, but it left a lot to be desired, and it's what most of us traders really call a dead cat bounce. Now, that might sound like something that you'd hear at the craps tables in Vegas, but it's certainly a relative term for the price action sometimes in the market, and it originates from someone who probably was very crude, who said that even a dead cat will bounce if it hits the ground hard enough. Well, I'm not a cat lover, but yet I'm not out to offend any of those who are. So the idea here is that stocks or the indices are going to bounce even when in the midst of nasty slides like this one that we're in right here. So eventually what happens is all those sellers that have been dumping shares the whole time, they finally take a breather and a little bit of a relief bounce comes along, and there you go. It gets a little bit of upside, but at the same time it can't be trusted, and that's the key. Now, a dead cat bounce looks like what we saw on Tuesday. So I'm going to zoom in here a little bit more on the chart and show you what I'm talking about. Monday's decline was right here, and that was a significant day on the downside. And most of that was recovered to the upside on Tuesday here in the Dow, but not all of it. And so almost doesn't count. So the size of the bounce was limited in that regard, and therefore it was hard to trust. And if you compare closing levels, Friday's closing level was at 73.65, and then Tuesday's closing level was at 73.50. So we were still 15 points shy of recovering what was lost on Monday. Now, in addition to that, the duration of this bounce on Monday was only one day. Obviously, we turned lower again today, and that helps to give Tuesday's upside that dead cat appearance. So here's the deal. The Dow is still looking poised for new lows. And as we zoom back out on the chart here, we see that former support has now turned into resistance here. Even though we've temporarily found a little bit of an area to bounce from here, it still is not a spot that we can start to trust. So especially after having spent the last couple of days really just zigzagging back and forth, what this ends up being is a rest phase after a sell-off, and generally that can point to further downside. And so if that occurs, then of course we'll see another slide lower. And as a result, caution is certainly warranted right now, so don't try to be a hero and expect that you're going to pick the low in the Dow. It's just not going to happen. Let sleeping dogs and dead cats lie, because lower risk opportunities on the long side will eventually come along, most likely in a market environment that's characterized by strength, not weakness, and that's what we're seeing right now. All right, thanks for joining me once again, and I will see you soon with another episode. But until then, trade like a bandit.